All right, let's dive right in. Today, we're cracking open Alphabet's latest massive earnings report. We're going to go way beyond the headlines to figure out what a $400 billion year actually means for the future of Google.
Okay, so let's set the scene here. For the better part of a year, the whole story around Google has been about a giant that's, well, under attack. Investors have been getting pretty nervous, and the one question on everyone's mind was simple. Is Google's time at the top of the tech world finally coming to an end?
For months, the company has been fighting this brutal two-front war. On one side, you have the existential threat of generative AI, which could totally disrupt its cash cow, search. And on the other side, just immense pressure from the government with antitrust lawsuits. It's been a tough spot, to say the very least.
But then, they dropped their fourth quarter earnings report for 2025. And let me tell you, it was a powerful, data-packed answer to all that fear and uncertainty that had been swirling around.
The first number that jumped off the page was a big one, a historic one. For the first time ever, Alphabet's total revenue for the fiscal year just blew past the $400 billion mark. That's just an incredible display of scale. And if you zoom in on just the fourth quarter, the performance was just as impressive. The company pulled in a whopping $113.8 billion in revenue, which easily beat what all the analysts were predicting.
Now, here's what's really wild. The growth rate behind that number, an 18% year-over-year increase for a company this massive, is a really big deal. It shows their business momentum is actually speeding up. And hey, you don't have to take my word for it. The CEO, Sundar Pichai, came out and said it himself, calling it a tremendous quarter and really highlighting that landmark achievement.
But you know the real story is always in the details, right? So if you look at this scorecard, you can see it was a strong but kind of mixed report. It was a beat on the really important stuff: total revenue, earnings per share, and crucially, Google search revenue. But there were a couple of soft spots. YouTube ads came in just a little shy of estimates. Maybe that means the ad market is a bit soft or competition is heating up. And operating income also missed by a hair.
So with that big picture view, the real question is, where did all this growth actually come from? Let's pop the hood and take a look at Alphabet's core business segments.
This chart gives us a fantastic high-level view. Google Services, that's Search, YouTube, Android, the whole shebang, is still the undisputed heavyweight champ, making up 84% of all revenue. But look over at Google Cloud. At 16%, it's a huge business on its own, and as you're about to see, it is growing at a truly explosive rate.
You know, the biggest question hanging over this entire report was the health of Google Search. For months, people have been predicting that AI was going to kill it, but the numbers from Q4, they told a very, very different story.
Get this. Search revenue grew by a super healthy 16.7% compared to last year. This one single data point did more than anything else to calm the nerves of investors. It showed that Google's bread-and-butter business is still incredibly tough, even in this new AI world.
But okay, if search was the resilient core, then the absolute star of the quarter, the growth rocket, was without a doubt Google Cloud. I mean, just look at these numbers. Cloud revenue skyrocketed from under $12 billion to almost $18 billion in just 1 year. That's a staggering 48% jump, and it's being driven by this massive customer demand for Google's AI infrastructure. Now, the story for YouTube was a little more complicated, kind of a mixed bag. Like we saw, it did miss its quarterly ad revenue targets, and that's something analysts are keeping an eye on. But if you look at the bigger picture, the platform hit a major milestone. Its total revenue from both ads and subscriptions went over $60 billion for the whole year, for the very first time. So, a great quarter that calmed a lot of fears. But this strong performance, it isn't the end of the story. Nope. In fact, it's the beginning of a brand new and incredibly expensive chapter for the company. To really get what's coming next, we need to quickly talk about a key term: CapEx. It stands for capital expenditures. And put simply, this is just the money a company spends on physical stuff. Things like giant data centers, servers, and all those powerful chips you need to train and run advanced AI models. And this is the number that made every single analyst sit up and take notice. Alphabet announced it's planning to spend between $175 and $185 billion on CapEx in 2026 alone.
Now, to put that number into perspective, this isn't just some small increase. That is nearly double the company's entire capital spending from 2025. This is Google signaling to the world that it is going all in to win the AI war, and it doesn't care what it costs.
So after digging through all of that data, the beats, the misses, and that colossal spending plan, what's the final verdict on Google?
Okay, let's break it down. The big numbers calmed market fears. The core search business proved it's incredibly resilient against these new AI threats. Google Cloud is an absolute rocket ship, accelerating with that stunning 48% growth. And yeah, while YouTube ads showed a little weakness, the overall business is still super strong. But the single biggest takeaway is this: the price of winning this AI war is absolutely skyrocketing.
Which brings us to our final provocative question. Google is basically pushing a nearly $200 billion bet onto the table to secure its dominance for the next decade. It's a massive show of financial force. But in the incredibly fast-moving world of artificial intelligence, is it going to be enough?